I am going to cover quite a wide range of EU legislative developments. I won't cover them in detail. I'm going to cover them at high level, and I really want to pull out some of the things with the most impact on our industry as we see it. I'm going to try, let's see, and then if I do, where's the presenter view? Here we go. So I'm going to just very briefly talk about who we are, a bit of data about the e-money industry, and then cover the legislative developments, the most significant things in this industry. So I think, is it Stefan? I think just spoke right now about who we are. So we are an EU trade association for e-money issuers and innovative payments service providers. So we include payment institutions, credit institutions, crypto asset service providers. We've been operating for over 20 years, and we have around 100 members. Our headquarters are Brussels and London, and we have branches in Lithuania, Ireland, Luxembourg, Netherlands, Belgium, and Malta. And our main objective is to remove barriers to business for our members. How do we do this? We provide a forum for firms to share issues that impact the new means of payment. We take action to address those issues. We are a voice for the industry with government, public bodies, businesses, and consumer groups. And we make a lot of effort to try and improve our members' understanding of the requirements and their ability to comply with their obligations. This is just a slide setting out a number of our members. This isn't all our members, this is just a snapshot. So you can see, you might recognize some of those brands there. Some of them are B2B, some of them are consumer facing. The thing that brings everybody together is, of course, that they've got an e-money or payment institution or credit institution license, and they offer payment services or e-money or crypto asset as well. This is just a quick slide to show you the growth of the e-money industry over the past 6 years. As you can see, it's grown steadily, and we expect it to continue to grow. So this is the number of payment e-money transactions, e-money payment transactions in the EU ECB stats. This, I don't have 2022, but this shows quite significantly also the difference between the annual growth in e-money versus annual growth of total payment services. So you can see there's a huge difference between the growth in e-money and other payment services over the last few years. So it's a growing industry. So firstly, the Payment Services Directive. Well, what I'm going to do is I'm going to start with what's currently in train, so the legislation that's still being developed, that's not finalized. Then I'm going to move on to what's been finalized, but we're still working out how to implement it. And then finally, I'll come to some pieces of legislation that are already in place, and it's just a question of how is this going to work in practice. So the thing that's taking up a lot of our time is the Payment Services Regulation in PSD3. This is, as you know, this is the third iteration of the Payment Services Directive. And what they've done is they've pulled out a number of elements from that to create a new Payment Services Regulation. Here I've listed some of the areas of most interest to us. So firstly, the definition of e-money. So there's a lot of debate about whether the e-money directive and the Payment Services Directive should be merged. In the end, this is what the Commission proposed to do. I think we were fairly neutral on that, but we want to retain the concept of e-money. So there was a recent court case, it's going to work. A recent case with a Lithuanian payment institution wishing to receive funds, then put this into question whether e-money should exist in future. But we think there is a really good case for e-money. And the case actually, in the end, did support the need for e-money to carry on existing. So it's just a question of how we're going to make it work in practice. One of the things that is being proposed is that distributors and agents should be merged. Now, these are two different types of entity. Agents do have a lot of responsibilities under PSD2, distributors a lot less so. We think if we merge the definition, it would mean that distributors wouldn't bother to offer e-money products. So this is like gift cards, prepaid cards that they sell in supermarkets. Sometimes gambling merchants might offer to open an account. Okay, the next big area, safe and access to bank accounts. So anybody who's got an EMoney or payment institution license knows that this is one of the first fundamental aspects of your business when you're setting up. Now, the PSR does improve this in many ways. Firstly, the Commission has proposed that EMoney institutions, payment institutions can safeguard at the central bank. Now, this is great because at the moment, everybody's reliant on safeguarding at commercial banks who don't necessarily want to bank this type of business. So we've got a very limited selection of banks who are willing to offer accounts to our sector. So safeguarding at the central bank would be great. Of course, this depends on whether central banks are willing to do it. So that's another thing. One of the other proposals is for the Commission said that you should, in order to manage risk, PSPs should be safeguarding at more than one credit institution, just in case one goes bust, then at least the funds, they're able to move funds, or if one decides to de-risk. So we think this is reasonable, as long as it's appropriate. Another suggestion is that PSPs have to safeguard using more than one method. Now, if you're familiar with this sector, you know that there are three options. So you put the customer funds, you receive customer funds, and you've got to safeguard. You can either use insurance, you can use segregation, which is putting it in a bank account, or you can invest in low risk assets, or you can do a combination. Now, a lot of large PSPs will do a combination of the above, but the majority only do one thing, which is put the funds in a safeguarding account, in a bank account. So requiring them to do more than one method, we think would be disproportionate and very challenging to implement for all the PSPs in Europe. Finally, there are some obligations around credit institutions. They do have to do a number of different things when somebody applies for a bank account with them. And the new PSR does introduce some more transparency and clarity around those obligations, which we do welcome. There's going to be a lot of debate about this, as you can imagine. So we'll see where that lands at the end. Okay, the next area is fraud. Okay, so we'll get to it later, but the instant payments regulation means there's a growing concern about customers who are victims of fraud. So this is scams in particular. So there's a big question: who's going to pay for the losses? So a customer has authorized a transaction to somebody else who ends up being a scammer. Under the PSD, if you didn't authorize the transaction, or your card was stolen, or somebody took over your device, then the PSP would carry the liability. However, so the Commission have proposed that a subset of this type of scam, where the customer has authorized the transaction, but they were tricked somehow, that PSPs should carry liability for a subset. Okay, so this is impersonation scams, where somebody pretends to be the PSP. Now, on the face of it, this seems pretty minor. However, it opens the door to this big question: should PSPs really carry liability for something that they had nothing to do with? It's not their fault. It's really the fraudster. Why should PSPs pay for that? So this is the big question. One of the ways that some of the policymakers are getting around this is saying, well, the transaction wasn't really authorized because the customer didn't really mean to send it to the fraudster, so it wasn't authorized. This is very challenging for us because we have a very clear delineation between authorized transactions and unauthorized, and this creates a very clear liability regime. By muddying the waters, it makes it very much more challenging to work out what rights the customer has and how we're going to apply this in practice. So we're not keen on this idea. Data sharing. Now, prevention of fraud. There are many measures you can use, and one of them is data sharing between institutions with third parties to try and catch these fraudsters out, to blacklist them, to get rid of them out of the system. So we're certainly in favor of this. There's obviously a lot of questions. How is this going to work in practice, especially when it comes to cross-border data sharing? Some member states have got very specific rules about what data can be shared. They have a lot of data protection concerns. And then finally, verification of payee. So this is about making sure that when you send a transaction, the recipient is the right person. You're sending it to the right person. This is covered later in the instant payments regulation. But the PSR extends this not just to instant credit transfers, but to all types of payments. Okay, fraud. The PSD2 also introduces, PSD3, sorry, and PSR introduces a number of changes when it comes to open banking and strong customer authentication. I'll just very briefly mention some of the challenging ones here. Generally speaking, we support strong customer authentication. It's a very, it makes transactions more secure, etc. However, we've long said that there should be a more risk-based approach, as in if a PSP knows that a transaction is quite low risk, they should have the liberty to decide, I will not apply strong customer authentication, or I will. And this can improve the customer experience without having any detriment to the security. What the PSR does is it proposes that third technical service providers, which I'm going to run out of time. I won't go into this in detail. Anyway, the PSR applies a liability on these technical service providers, which they didn't have under PSD, but also an outsourcing agreement, which is not something we want. Okay. Let me just jump over this. And then stable coins. So there's a big question. MiCA is the markets and crypto assets regulation, and stable coins are supposed to be subject to the PSR because they are a payment type. However, when the PSR was drafted, it was not drafted with a distributed ledger in mind, or a distributed governance structure in mind. So a lot of the PSD requirements or the PSR requirements would not work in a distributed context. So we've done, we're working with some other associations to raise this issue and see if we can find a solution to it. Okay, that's PSD. Now, other ongoing initiatives. So now we're moving to the next stage down. So these are things that have been agreed already. And now we're working through some of the regulatory technical standards, some of the detail. How should this apply? So we've got the digital euro. Oh, sorry, no, this is still ongoing. Not there yet. The digital euro, this big political initiative. The objective is to strengthen the euro area and foster the monetary sovereignty of the euro area and foster competition in the EU. It's supposed to be an electronic equivalent to cash. The phase 2 was initiated last November, and there is an EU regulation going through the process at the moment. We think this does offer an opportunity for innovation in the payment sector, and it's a business opportunity for PSPs of all sizes. However, there are some concerns. Previously, there was an expectation that only banks that could connect directly to the settlement systems could offer a digital euro wallet. We raised concerns about this, and eventually they have adjusted this. There will be a cost. There'll be a big build cost, and it may fall on acquirers because merchants will likely want to offer digital euro as a means of receiving funds. And so acquirers have to build that functionality. There's a big question about competition as well. So the digital euro will basically be in competition with existing payment products. And the ECB, not only will the ECB may be able to set limits for fees and merchant service charges, and they also do regulate some of these PSPs. So there's a little bit of a, there's a question of how it's going to work for PSPs that are already in the market. Okay. FIDA. Now, I think this is covered later. So there's another presentation on FIDA. So I won't go into this in great detail. This is about data access. So it establishes a customer's right to share financial data and control who has access to it. Firstly, the timeline seems a bit unachievable. So it has a whole bunch of sectors. And the idea is the customer can access all their data in these different sectors and give third-party access to this. It's impossible. You can't do this in 18 months. There also is no there's no provision for smaller entities that, maybe customers may not even want to get their data from those entities. So, and there's no interoperability. So you might have an sharing of insurance data, you might have a sharing of banking and open payments, and then you might have energy or other data, but there's no interoperability. So the customer is going to have to have different providers in each sector. So we think they need to have a more achievable time scale, need to have an implementation roadmap that's phased based on market demand. Okay. I'm just going to briefly talk about this. So this doesn't come up very often. This is the Deposit Guarantee Scheme Directive. Now, this is important for e-money and payment institutions because if a bank goes bankrupt in the EU, their funds are protected. However, if that bank is holding an e-money or payment institution safeguarded account, those funds are not protected. So they're reviewing the DGSD to introduce a new provision that will allow protection of those funds should the bank go bankrupt. Of course, we welcome this, more protection for customers. There is, some legal questions about the distinction between what's e-money and issuing e-money and what's a deposit. But in general, this is something very welcome. Okay, recently finalized. Now I've put two things together here. We've got digital ID and we've got the AML package. These were just finalized in the last couple of months, maybe even last month. And they're both really important. And they'll both come into force at around the same time. So the digital ID wallet, this is a proposal. This is something that is going to have to be made available to all EU citizens, residents, and businesses that want it. The user will control access to their wallet data through a privacy dashboard. And certain service providers, which includes banking and financial services, so our sector, will be required to accept these digital ID wallets. So that's on onboarding, for example. If somebody wants to onboard using their ID wallet, you'll have to have the functionality to accept that. And the intention is that they should also be fully interoperable. So an Estonian ID wallet should be acceptable in Spain, So I've just put here, so the member states have to provide at least one ID wallet within 24 months. So we think around end of 2026. Financial service providers are going to have to accept this. They have to have functionality to be able to recognize these ID wallets and accept them by roughly end of 2027. Now, this timing is really important because the AML package, this was just adopted and published. And this will introduce, for those firms who benefit from some of the CDD exemptions or lighter touch things, this will have a big impact. So the AML regulation is a new single rule book for AML rules. And on CDD, the flexibility that firms currently have in terms of what data points they need to identify and verify the payment service user will really be reduced significantly. They'll be restricted in the types of verification they can use. It's almost going backwards, so except for the digital ID acceptance. And for us, and there's a strange reporting requirement for virtual IBANs, but I don't have time to go into detail. It's not 3 minutes left. One of the good things, there's an exemption from CDD for e-money products, and this is something that we fought hard for. It was removed from the draft, and we fought very hard, and it has been included eventually, somewhat limited. And then digital ID is accepted as an alternative way to do KYC. So it's really important that the digital ID is in place by the time the AML regulation comes into force. You can see the AML regulation is coming in around Q2 2027. And hopefully member states will have provided their digital wallets by end of 2026. It's very tight. Let's see. The directive, again, some great improvements for beneficial ownership registers, but the single market is being eroded for our sector anyway, through increased host member state requirements by the way of these kind of central contact points. So a lot of host member state regulators are nervous about firms coming into their territory. And so they're asking that they have to establish some kind of central contact point within their territory. But it means that if you're a PSP in one member state and you want to, provide services in 27 other ones, you've got to find out whether they need you to have a physical presence in all of these other countries. So it's really challenging. Okay. Right. I think I'm coming up to the end of my time. DORA, this is, I'm sure you will have heard of this. This is the Operational Resilience Act. This will apply from January next year. So again, very, very tight timescales. It harmonizes rules on operational resilience across the financial services sector, and there is a lot to do. In fact, it's really impossible. It's going to be impossible for a lot of financial entities to revise their operational processes and external delivery relationships by next January. We haven't even got the final text of some of the implementing standards. So expecting firms to do it by January is really asking a lot. One of the other big changes is that firms will be expected to manage their outsourcing relationships, not just the immediate outsourcing relationship, but several layers down. And that's going to take time. Contracts will have to be amended. Yeah. Okay, MiCA, I know there's a presentation on MiCA coming up, so I won't go into this in detail. Again, this is coming in very quickly. So July 2024 for issuers of ARTs and EMTs, EMoney tokens and asset reference tokens, and then for issuers of utility tokens and CAS from January next year. So all the member states are getting ready with their authorization processes. They're opening up the authorization portals, etc. It's going to be a big change. It's going to be a big change for a lot of crypto asset service providers. We've noticed there'll be a big problem for these providers when they reach what's called significant. And it's very easy to meet this criteria. You just have to be a certain size. You have to have a certain number of holders of the token and a certain value of capitalization. And then you suddenly become significant and you have maybe 50% extra capital you've got to hold. So it's a big lift. Okay. Instant payments regulation. This is again something that everybody's looking again with very short time scales. So this introduces mandatory instant payments for all credit institutions from January next year. And then for our sector, slightly later. It's also something very welcome for us. It's introduced an amendment that allows us to access payment systems directly. So far we've had to go via credit institutions. Now we'll be able to connect directly. Of course, it would be subject to conditions. We'd have to apply and you have to have, meet a lot of requirements. Fees, you can't charge more fees for your instant credit transfer fee can't be higher than for normal credit transfer. And verification of payee. So this is going to be a lot of work. This is all transfers are going to have to be verified. The end payee is going to have to be verified before you send the payment. And this is very challenging to build. So in the UK, it took several years to build confirmation of payee, and that's not even finished. So we're still onboarding a lot of the PSPs who are not direct members of the schemes. Doing this cross-border across the EU is a big job, making sure everything is interoperable. And then you also have a lot of accounts that don't use IBANs. They may use different types of identifiers. So this is a big job, and we expect a lot of effort to be put towards this for the next year. Okay. These are just a few others. CSOP, so this is a reporting requirement to try and catch out merchants who are avoiding their VAT, value-added tax obligations, which is fine. So PSPs are supposed to report on any of their customers who receive more than 25 cross-border payments in a quarter. However, the way that they've designed this is that even if you've got one customer in another member state and they receive more than 25 transactions, you've got to register with that local tax authority and report to them as well as your own. So for a lot of our members, they're small, they're not massive institutions. They have to register at 25, 27 national tax authorities, and each tax authority has got a different registration requirement. A lot of them don't even have the registration available yet. So this is a really big compliance burden, very expensive. So we're writing to the Commission to try and get a bit more coordination about this. DAC 8, so this is a new reporting requirement. It comes into force next year. It applies to banks already, so it's not new for them. It's new for us in the e-money industry, and it's new for crypto asset service providers. This is about reporting on any funds that if you've got customers from any of these OECD countries that have signed up for what is it called? Common reporting standards. So this is about catching people who are avoiding tax. So by holding funds in another country, they're avoiding paying income tax. And the purpose is that you send all your data on all the foreign customers you've got, and then that gets sent to the tax authorities in those in those countries, and then they can check it against their registers and see who's avoiding tax. Okay. Finally, and we got some great outcomes there when it comes to EMoney. So we managed to get some thresholds. You don't have to report below a certain value. I think it's 10,000 euros. Finally, this is something that's not even in financial services that came up recently, which is the batteries and waste regulations. So this is in it's environmental, but it has an impact on merchant acquirers because it requires you to have removable and replaceable batteries, and most point of sale terminals don't have that kind of battery. You know, they want it needs to be there for a long time, so they tend to use batteries. You can't get them out. You need to go and get them replaced by the acquirer. So we're trying to get that carved out. Those are just a few. Now, this is just a flavor of what we're dealing with, and you know, the different stages. It feels very much, this year feels a lot like an implementation year. What's happened? What's been agreed? How are we going to do it? Except for the PSD, of course. Thank you very much.